Thanks so much for joining us. I'm Marlon Bowling with you. Here it is Thursday, and the day before the big supply and demand reports come out from USDA tomorrow. They'll be out at noon Eastern time and 11 o'clock Central time. And there's been a little bit of turmoil circulating around those numbers. And given the fact that, well, apparently there were some acreage numbers that were released inadvertently, accidentally. Don't know for sure how to explain that, but here to talk about that, I want to welcome aboard Ted Seifried of Zaner Ag Hedge. That's been all the talk of the trade here this morning, other than the Gulf ports being pretty much shut down here, Ted. A lot of discussion about something that slipped out from FSA apparently yesterday related to acreage. Maybe you can explain what took place, because there's a lot of kind of mystery circulating around this and the impact that it may have on tomorrow's report. What happened yesterday?
Yeah, we're going to call it an oopsie from the FSA office. They let slip some numbers that were not supposed to come out until after the report on Friday, but we have them now. And so now the question is, what do we do with that? And we know that the USDA is looking at these FSA numbers to give them confirmation on acreage. They have said that they are going to look at that because we're getting reporting so fast. It's so complete this year, so much more than other years, that they're able to do this on a September report rather than waiting till an October report. So now we, in error, saw the updated FSA numbers as of September 1st. And so looking at that, trying to think of how the USDA would think, it makes you really wonder what they're going to do with these acreage numbers. It's very difficult to compare year over year because, as I said, these FSA numbers are coming in historically fast. They're coming in very, very quickly. They've wanted to do this for the last couple of years, but delayed planting and issues with that has delayed the numbers as like we usually would see. But this year they've come in so fast, they're so complete, that it's giving us an idea of what those final acreage numbers might be, and it's going to give the USDA a chance to revise their numbers. Now, from the best of my analysis, and this is a debate that's raging because we don't know exactly how complete these numbers are. They seem to be a lot more complete than usual, but how much more is there to go? But it does seem like we could have a little bit more corn acres, and you could read the soybean number either way. The soybeans could be slightly higher to slightly lower. It's really tough to tell, but a lot of people, the market, thinking maybe about 1 million more acres in corn. Now, that is interesting and also strange because in the last 25 years, only 4 of those years have the final numbers been above what we saw in the June planting or planted acreage figure. So it would be sort of an outlier. And, that begs the question as to why would those numbers be higher? And I'm going to say, I think I have an answer for that. The USDA, when they get those survey responses, they have to put their math to it. And their math includes an allotment for prevent plant acres. But with good planting this year and with high prices, I think the prevent plant acres that they estimated might have been too high, and that could be where those extra acres are coming from. It's not something that happens very often, but this might be the year that it did. So I can justify about 1 million acres higher in corn. I am actually about 200,000 acres lower on soybeans based on these FSA numbers. And my estimate for the report tomorrow, by the way, I've got harvested acreage going up 500,000 acres for corn, planted acreage going up 600,000. So not a big number, but when you put that together with an expected higher yield, the expectations for this report are a little bit bearish, especially for corn, and then also so for a little bit for soybeans too.
All right. Well, let's take a look at our, our current prices. And then we'll take a quick break on the corn right now with our quotes provided by bar chart, drifting lower, 3/4 lower on December at 509.5. Soybeans, we did have a sale of 132,000 tons to China this morning, but the market is lower anyway. That figures. November down 4 3/4 at 12.74 3/4 per bushel. Chicago wheat right now with our quotes from bar chart. We have December down 12 1/4 at 697 1/4. And in Kansas City, we have December down 15 3/4 at 689. Minneapolis wheat December currently down 24 1/4. Ouch, 870 1/4 on the low of the day. We'll take a look at livestock trade coming up after this. We're back with Ted Seifried of Zaner Ag Hedge, and let's look at livestock trade. Currently on live cattle markets with our quotes provided by Bar Chart. Ted, we're still higher across the board. It's, almost 10 o'clock Central Time, and we still have a higher market. That's unusual for live cattle the last 2 weeks. We have the October 52 higher, December 30 higher at 128.95. Usually by now they're starting to roll over. On the feeder cattle market, well, it's a split decision. Nearbys are higher. October up 45 at 159.72, November 25 higher, and the far out deferreds just a touch lower out there. Now to the lean hogs. Let's go to lean hogs, and October up 17 cents. We're at 87.55. December now 32 cents higher at 80.87. Not big gains, but they are slight. Slightly higher across the board. Now 123 I see we're getting for cash cattle trade in the plains today on about 600 head sold in Kansas. So that would be $1 under yesterday, but still pretty steady with what we had last week. What do you see happening here on livestock this week, Ted?
Yeah, right. We're higher on a Thursday, and it's almost 10 o'clock. What do we do? I don't know. Yeah, okay. I'm hoping we just define the bottom end of this range for the cattle here. I think we've gone a little bit too far to the downside, and you have the market sort of reflecting that because, we were bracing for even lower cash trade than what we saw here this morning. We didn't get that, so now we've had a little bit of a rebound. We know Packers margins are still really very good. We know domestic demand is solid. So I am looking for a recovery in cattle. I would really like to see that. I was kind of a little bit unsure as to why we had to have as deep of a break as we just did. Cash did follow to some extent, but ultimately I see reason for cash to stay strong. So again, I'm hoping that we just carved out the bottom end of the range. And then hogs, yes, a little bit of a bounce, just kind of keeping sideways in this range. We held key support, but wow, we're very sideways at the moment.
Well, thanks for all the help today. And Ted, always good to hear from you. Thanks for explaining the deal with USDA if we can figure that out. Ted Seifried of Zaner Ag Hedge with us today. Janet, I'll turn it back to you.